The Spain-Argentina final on July 19, 2026 wasn't just the biggest soccer match of the year. It was also one of the biggest gambling events in sports history. Americans wagered billions of dollars on the game, making it an even bigger betting event than the Super Bowl. In fact, just two fast-growing prediction market platforms, Kalshi and Polymarket, handled nearly $6 billion in trading on the final alone. When you add betting across the rest of the tournament, along with thousands of side markets, analysts have argued that the 2026 FIFA World Cup may have become one of the largest gambling events ever recorded. To understand how big that is, US sportsbooks said the tournament generated about the same amount of betting as 10 Super Bowls combined. So this wasn't just another sports final, it broke betting records in the United States and around the world. Hi, I'm Mariana. Let's talk. How did we get here? The biggest reason behind these massive betting numbers was not only the long-standing popularity of traditional sports betting, but also the sudden rise of prediction markets, platforms where people buy and sell contracts based on real-world events. The idea is super simple. Instead of placing traditional bet, users trade predictions. For example, someone might buy a contract that pays out if Spain wins the match in 90 minutes. A specific player will score at least one goal, or any other possible outcome. It works a little like trading stocks, but instead of companies, people are trading the chances of future events. Two companies became the biggest names in this new world: Kalshi, a US-regulated platform, and Polymarket, a crypto-based prediction market. During the 2026 World Cup, both platforms moved from being relatively niche products used mainly by early adopters and traders to becoming major players in sports betting. The numbers were enormous. Both platforms broke their own records. By June 2026, the World Cup started in June as well, remember, Kalshi had reached more than $30 billion in trading volume, a massive 70% increase from May, with most of that activity coming from sports contracts. World Cup related predictions alone accounted for over $20 billion of that month, more than 70% of all tradings on the platform. Polymarket also reached record numbers, surpassing $10 billion in global volume. Even a newbie like Rotera, an event contract exchange that launched only in June, saw more than $2 billion in trading volume in its first months. Crazy numbers. And by the way, if you're wondering how these platforms make money, they earn revenue by collecting fees on every bet. As of the day of filming this, July 22, Kalshi is already known to have brought in 3 million new users during the FIFA World Cup and handled $40 billion in sports wagers during the tournament alone. To put that into perspective, traditional US sports books were expected to handle only around $3-4 billion in bets during the entire World Cup. Obviously, this saw an increase in activity as well, but compared with prediction markets, analysts say the growth was much more modest. So in other words, these new prediction platforms were suddenly competing with and in many cases even surpassing the biggest names in gambling. But this growth didn't happen by accident. These platforms aggressively went after new users, especially Americans who had never placed a soccer bet before. They promoted themselves heavily during the US World Cup broadcasts, with ads appearing during matches, halftime, and breaks. Kalshi also found a way to put its name directly in front of millions of fans. The company became an official FIFA prediction market partner through a branding deal with the World Cup's existing prediction market sponsor. In simple terms, Kalshi paid to associate its brand with the tournament and get more visibility. The results were just wow. During the tournament, by the end of June, Kalshi's daily active users had increased by more than 36% compared with mid-June, while traditional sportsbook apps such as DraftKings, FanDuel, Caesars saw their activity drop by a similar 30-40% from their early cup peaks. And by late June, Kalshi and Polymarket also accounted for the majority of new downloads among major betting apps, showing just how quickly things were changing. One trend particularly surprised many analysts: more women were joining in. During the World Cup, Kalshi's female audience reportedly more than doubled, partly thanks to exposure from mainstream shows like Love Island. That was a big deal because sports betting has traditionally been a male-dominated space, and suddenly prediction markets were reaching a completely new group of users and turning more people into traders. Essentially, they managed to do something traditional gambling companies had struggled with for years. They made betting feel less like gambling and more like investing. But of course, such rapid growth also came with controversy. Some US states have challenged these platforms in court, arguing that sports prediction contracts are essentially another form of gambling and should be regulated like traditional betting. Kalshi and Polymarket disagree, arguing that they operate as federally regulated financial markets, not sports books. The debate has even reached Washington, where lawmakers have discussed whether certain sports-related contracts on prediction platforms should be restricted. Meanwhile, traditional gambling companies are trying to enter the same space. Companies like DraftKings are developing their own prediction market products, while technology and crypto companies are also exploring the opportunity. Even Meta has announced that it's working on an app that would allow Facebook users to bet on sports outcomes. So the result is a major shift in the betting industry. What started as a niche experiment had become a mainstream phenomenon, and the 2026 World Cup became the biggest test yet of whether prediction markets could reshape the future of sports betting and the broader gambling industry. With money flowing, the cup spawned its own wagering dramas. On the high end, Drake made headlines when he revealed a $1.5 million bet on Argentina to beat Spain in the final. As someone who's worked in affiliate market for years, I can't help but notice how Drake's massive betting posts also work as powerful marketing for the platform he partners with and for the industry as a whole. After all, he has an official partnership with the crypto casino and betting platform Stake and regularly shares his multi-million-dollar bets on social media. He's built a strong connection between his personal brand and betting culture. And whether it's a smart branded strategy, simply part of his lifestyle, or a combination of both, one thing is clear. Drake has become one of the most recognizable faces in modern betting culture, almost a symbol of it. So when an average person thinks about betting, they might immediately associate it with Drake, celebrity, and a certain luxury lifestyle. There is a powerful psychological effect here. Drake is doing it, so why can't I? Nevertheless, Argentina lost and Drake's bet was gone. He already had a long history of high-profile sports wagers, with many of his recent bets ending in losses. Eventually, the internet gave this pattern a name, the Drake curse. The idea that any team or athlete backed by Drake somehow ends up losing. But he was far from the only one laying down millions. The Fox Sports betting recap noted that one bettor placed $250,000 on Argentina to win the entire tournament back in mid-June. That wager would have paid out more than $2 million, but as we know now, he lost. Hopefully it wasn't his last money. On prediction platforms, the money was just as wild. One Polymarket trade placed more than $1.5 million on the final, not ending with the exact score of 3-2, a prediction that became popular online after someone had posted that score years earlier. The trade was essentially betting against a viral internet prediction. The market gave the trader about a 97% chance of winning, and the bet eventually paid out around $45,000 in profit when Spain won. Another one placed more than $300,000 on Messi not scoring 2 or more goals in the final. Since Messi failed to score, the bet also won, generating about $30,000 in profit. But it wasn't only million-dollar bettors getting involved. Smaller bettors were also chasing huge payouts. One FanDuel user turned a tiny $2 bet into a potential payout of almost $9,000 by correctly building a 6-leg parlay. As Spain kept winning, the tickets stayed alive, although the bettor eventually cashed out early for a little over $4,000 instead of waiting for the full payout. Either way, those are some insane numbers, and these were just a few examples. Across sports books and prediction apps, there were massive winners, but also plenty of people who lost their money, lots of them. However, as you can see, betting became one of the biggest storylines of the tournament. Sports books across the US also reported record-breaking activity, with even Caesars saying the final generated 65% more betting volume than any previous soccer match it had handled. DraftKings called the World Cup the biggest event of the year. So, simply put, people bet on this tournament on a scale never seen before. Why did the 2026 World Cup spark more betting than ever before? Several things came together at the perfect time. First, the tournament itself was bigger than ever, with 48 teams and 104 matches. It was also co-hosted by the United States and Canada, so many games were played at times that were convenient for American viewers. At the same time, traditional sports betting became legal in more parts of the US. By 2026, around 65% of Americans could legally place bets, compared with only about 40% during the 2022 World Cup. The huge interest showed up immediately. The data was clear. Americans were hungry to bet on this soccer spectacle. The second one, new technology made betting easy and social. These new smartphone apps blurred fantasy sports, stock trading, and gambling into one experience. Anyone could put a few bucks on a contract, see the price move in real time, and cash out without the old hurdles of visiting a bookmaker. Viral social media, like that old tweet foretelling a 3-2 final, also fed mania, as people shared tip-offs and got each other excited to trade. Crypto hype and fintech gamification resonated with younger fans, so prediction market platforms, along with traditional sports books as well, noted that much of this growth came from first-time bettors and even women, demographics that had barely engaged with sports gambling before. In short, the psychological and cultural incentives were strong. It felt new, it was built into the viewing experience, and small bets made participation feel accessible to millions of people. Finally, the business model gave everyone's skin in the game. FIFA itself enforced competition by selling official prediction market partnerships and sponsorship deals. Fox Sports even included Kalshi's branding in its broadcasts. As a result, betting companies spent millions promoting World Cup betting, hoping to attract new users who would stay after the tournament ended. At the same time, prediction market platforms insisted they were not sports books at all. They argued that they were federally regulated financial exchanges, not gambling companies, and fought legal battles trying to preserve the legal framework that allowed them to continue offering these markets. And by the way, last but not least, some economists and behavioral researchers argue that in our forever era of rising financial pressure and growing economic uncertainty, more and more people have become attracted to risky opportunities that offer the dream of fast money. And prediction markets appeared at the perfect moment, transforming uncertainty itself into something people could trade, from presidential elections to World Cup matches. So all of this suggests broader trends. Consumer behavior is shifting toward treating events more like financial markets. Fans in 2026 didn't just watch the game, they invested in outcomes through apps. Sports leagues are noticing this shift as well. MLS, for example, signed Polymarket as its official and exclusive prediction market partner, integrating these markets into the fan experience. MLB went even further, also partnering with Polymarket while creating an integrity framework with the CFTC to monitor risks and protect the sport from potential manipulation. In the end, when Spain lifted the trophy, the biggest story was not only what happened on the field, but everything that happened around it. Millions of fans didn't just watch the final, they participated in a massive financial ecosystem built around predictions, markets, and betting. Whether this was truly the largest gambling event in history depends how you measure it, but by many indicators like tens of billions of dollars wagered globally, record-breaking platform activity, and betting volumes in the US alone comparable to multiple Super Bowls. The 2026 World Cup showed how far sports betting had evolved. This tournament did reveal something bigger about the modern world. Technology can transform even the most traditional cultural events into global marketplaces. The line between watching, predicting, trading, and betting is becoming increasingly blurred. And as sports continue to become more connected with technology, one question remains. Are we simply finding new ways to engage with the games we love, or are we turning every moment into something to monetize? Let me know your thoughts in the comments. If you enjoyed this video, don't forget to like and subscribe. Thanks for watching and see you in the next one. Bye!